Hello and welcome. Well, if you're here, you are at Graduate Student Legal Aid's GRadulting Workshop Series. My name is Debbie McCutsky, and I'm the coordinator of services and programs for Grad Legal Aid. And our focus today is tax preparation. And the countdown for submissions is April 15th. The clock is ticking. You have 57 days to get your filing in order. So I'm glad you're here because today's session is designed to give you a head start and to answer your questions. So before we dive into the presentation, I just want to tell you a little bit about legal aid. I may have met some of you at orientation time, but in case I didn't, I just want to let you know who we are and what we do. So outside of these workshops, which we have about 7 of them every semester, we provide legal consultations for local issues, legal consultations for immigration issues, advocacy for students who are facing charges from OSC or OCRSM. And I am a notary public, so we provide notary services. So if you paid your student fee, then you've paid for our services, and there's no additional charge. So I encourage you to visit our website to learn more about our services and request assistance. So now for a few rules of engagement today. This session is being recorded, and I will share the link to the recording with you tomorrow, along with some other resources. Today, we're using the Q&A feature for questions, not the chat, but the Q&A feature. Let's see. You can submit questions anytime during the presentation. Some of those questions will be answered right away, and others may be postponed until later on in the presentation. So don't be shy. Ask questions. That's why we're here today. We have 90 minutes to talk about taxes. So we're going to get started, and I am so happy to introduce our speaker today, our lead speaker. It is Professor Sam Handwerger. Yay! Thank you, Sam, for being here today. Professor Handwerger is a CPA and a senior lecturer in the Accounting and Information Assurance Department at UMD's Smith School of Business. He's also a UMD undergrad. Well, he was a UMD undergrad. He holds a Master of Science in Taxation from the University of Baltimore. And you'll all really be happy to know that he is the advisor for Terp Tax. And if you haven't heard of Terp Tax, you're going to hear about it more today. But quickly, it is a free tax preparation service to low-income individuals and students right here at the University of Maryland. I'm also happy to introduce Susan Dougherty. Hi, Sue. She's on hand today to provide support and information. She is the Director of International Student and Scholar Services right here at the University of Maryland. And she's responsible for immigration practices and policies here at the university. And she does a great job at supporting our students. So thank you both for being here today. And I'm just going to turn things over to you. Take it away, Sam.
Okay, thank you. And Debbie, thanks again for inviting us. And Sue, it's great to have you here because you're an integral part of working out some tax issues from time to time when things get a little complex. Okay. All
Thank
right,
you,
I'm going
Sam.
to share screen, and that way we can see what I've got, and we'll go from there. So let's take it to that point. Okay. Hold everything. Do. And here we go. All right. So this is our agenda. We're going to cover what's called U.S. tax compliance for F1 students, and we will also cover the state tax compliance issues as well, because they both exist, federal and state. All right, let's take it away. Here we go. The first step in arriving in the U.S., whether your visa is F1 or any other status, is to understand who you are in terms of the United States, meaning what's your tax residency status? Are you a resident of the U.S. or are you a non-resident? Those are the two questions that would be asked of you if we were looking at a decision tree. So the first thing we're going to do is ask that question of you, and you want to play the game with me at home and determine what you are. So residency for tax purposes is not your immigration status. You might have an F1 visa, which says you are not a U.S. resident, at least for purposes of your visa, but that's not how the tax works. There's a tax status, and that's separately determined by the Internal Revenue Code here in the United States. So you could be here and be a resident for tax purposes. Let's continue to find out. Here's the first test that is done before we get to exceptions is the 3-year substantial presence test. It counts your days that you're here. The key here is 183. Once you get to 183 in this mathematical test, you are a resident for tax purposes. Let's take a look at the test briefly because it's not going to apply to many of you, as we'll see the exception next in the next slide. But the basic test is take your days at 100% for the current year. Take 1/3 of the days that you were here in the United States for the prior year, and then take 1/6 of the days that you were here the year before that. So you're mathematically computing all the days here at 100%. That would be 25. You would count 1/3 of the days in 24 and 1/6 in 23. Add it up. If that adds up to 183 or more, you are a resident for tax purposes. Hence, substantial presence test. You were substantially present here for the 3-year period of time. And by the way, of course, if in 25 you were here 183 already, you don't have to go back and do the other years. You're already a resident for tax purposes. Now, F1 comes under exception. Yay for F1. The exception is you don't count your days. You don't count days in any of the years until you've been here past a period of time, which is your exempt period of time. Your exempt period of time is 5 calendar years. We'll go through an example right on this slide, but this is the basic rule. For the first 5 calendar years you're here, you don't count your days. You're still considered a non-resident for tax purposes. Here's an example. If you're F1, you arrived in August of 21 and you stay here all the way through the end of 2025. So you don't count any of those days, even though you've been here substantially for more than 183 days in that time period. But don't start counting the days because calendar year 21 is 1. Let's do it. 21 is 1, 22 is 2, 23 is 3, 20. You're getting the idea, I think. You can see that I can count. I am an accountant. All right. So there's your 5 calendar years. Notice that it doesn't matter that you came in August. You count each calendar year by itself, not 5 years, 5 calendar years. So once you finished 5 calendar years, then you start counting your days immediately at the beginning date of the next year. So this particular person will be counting days next year, and then depending on whether they max out over 183 or not, will depend on what their status is the next year. We're going to skip the 1-year option. I just have a slide for it to let you know that there are certain cases where you can elect to be a resident for tax purposes. It's not something that exists for F1, but after you finished your 5 calendar years, you might want to go back and re-look at the rules to become a resident for tax purposes. Oftentimes, being a resident for tax purposes here is a cheaper way to go. Less taxes because of the tax deductions that residents get. So residents get these tax deductions and credits which reduce taxes, but unfortunately, many non-residents do not have the same abilities as the residents do, and so your taxes could be higher, not likely, but it could be higher if you cannot call yourself a resident for tax purposes. Don't worry about that now, just keep it in the back of your mind. All right, we're going to look at the tax form so you have some idea of what you're looking for in terms of making sure that you're in compliance. And let's take a look at what some of those forms are. We're going to go through the first form. I'm going to not pause, but I'm going to slow it down here for a minute. It's really, really important to understand that Form 8843 is not necessarily really an income tax form. It's an information form. So let's make note of that. This is an information form. It tells the IRS that, hey, I'm an F1 and I'm here within my first 5 calendar years. I'm not counting my days. That's what the form tells the IRS. So then the IRS doesn't look at you to say, oh, you should be a resident for tax purposes under the substantial presence test. So who has to follow the 8843? Any F1. Now listen closely because I don't want I don't want you to make this mistake. I really don't. We care about you. Uh, Form 8843 has to be filed by all F1 students during the year they're here, during those 5 calendar years we spoke about. Each and every year you're here. Income, no income, go to school, don't go to school, be in whatever it is, you got to file this Form 8843. It's a form that all you got to do is sign your name. Well, you fill it out and answer the questions, but the questions are easy. It's basically saying what days you've been here and showing that you haven't exceeded 5 calendar years.
Mhm.
Here's a copy of the form. It's one page. The section that'll apply to you will be down here with students. Of course, you fill in the information here. You don't even need an ITIN number. So you don't need a social security, you don't need an ITIN number. All you got to do is put your address, your name, and if you can't electronically file it, you mail it in. There's an address in the instructions, very simple. You mail it in once a year. Mail, if you haven't done it and you've been here a couple years, you can do the back ones. There's no penalty, no penalty for lateness, but don't mail all of them in one envelope. Mail each year in a separate envelope so the IRS doesn't lose the fact that you're not just filing for one year. So separate envelopes for that. I'm going to slow it up here just for a second, see if there's any questions on all that so far. Otherwise, we'll keep on rolling, rocking and rolling.
Sam, we had one question that was about Social Security numbers. The person is asking if they have their appointment for the Social Security number. They had some employment in the year 2025, but it looks like I came to campus. Actually, the person didn't work in 2025, but they started work in 2026. Have an appointment for Social Security on February 19th. Should they wait for Social Security before filing taxes?
So for the 8843, you don't have to wait since there's no number requirement for the tax return. If you had no income whatsoever, technically you don't have to file if there was no U.S. income. So when I say no income, I mean no income from the U.S., no scholarship either, no
Mhm.
issue with working as an RA or TA. You wouldn't have been able to do that without the Social Security anyhow. But as long as you don't have a scholarship or any other source of income from the U.S., you don't have to file. You don't need to worry about the Social Security number. On the other hand, if you did have a scholarship, chances are you have some kind of temporary ITIN that we can work with. And if not, still come in, get your appointment. When you get your Social Security number, we simply attach it and put it in, and we can e-file you right away. So we may have to put you on extension, no big deal.
Thanks, Sam.
Okay, thank you. All right, we are ready to move along, and we shall. Another form that you will be seeing that you get if it applies to you in 2025 is what we call the W-2. It's going to be, as it says, telling you how much you earned if you were working, like a TA or RA for the University of Maryland, you would get a W-2. It looks like this. I show this to you because I'm going to do 2 lessons in one here. The 2 lessons are the following. In each box will give you information about what you were paid and what you earned and the benefits that you were given. Like box 12 will tell you all the benefits that you may have had during the year. And that would be, here's box 12. It'll tell you most of those are not related to tax, so no problem. In box 1, you'll see your total amount of pay that you receive that is subject to income tax. So that's important to realize. But the second lesson that we're going to learn here, well, one other lesson before we get further, you also find out how much you'll find out how much was paid under the state and which state. It'll say Maryland or Virginia. Here it will tell you the state information. Under which state did you work? And it depends somewhat on where you work and where you live. but it'll all be done by the employer. The employer was here and your name is here, and the employer puts all the numbers in there. You don't file this, you just get it, and then you work with it. The third lesson probably is, again, this is the federal, this is the state. So now you have what you need to do there. But the next lesson is this box, this box, this box, and this box. If you're F1 in your first 5 calendar years, one more time, F1, first 5 calendar years, yes. Nothing should be in box 3, 4, 5, or 6, where the blue is. Nothing should be there. If you get a W-2 with something in there, that means that Social Security taxes have been taken out of your pay and you are not subject to those taxes because you're not a resident and you're exempt from it while you're in those first 5 calendar years. That's wonderful, saving taxes. But you didn't have to put money in, and whatever's in this box and this box is money taken out of your paycheck unnecessarily. So you're going to need to follow you're going to need to follow the instructions on a form that we have at Terp Tax. You just have to contact Terp Tax. I think I'll send it to Debbie and Sue so they can have it as well. It explains to you how to get the money back. It's a process you have to go through, not too difficult. Well, it's a little burdensome, but if the money's in those boxes is meaningful to you, you can get that money back. Second type of form that you might get is what we call the Form 1099 series. It will be reporting interest or dividends from U.S. banks, U.S. stocks, and maybe sometimes some miscellaneous items might show up on there, not too often. So that this one's not the regular 1099 miscellaneous doesn't happen all too often. Here's an example of the form. It will show your ITIN. No, it'll show the ITN of the payer. This is the payer, not you. So it won't do this box, but it'll show how much you received. It'll give you the number in interest income. And that's all you have to do is give that to your tax preparer or take it with you when you do your tax software input. You'll need, if you had one of these, if you got one of these, you'll need it when you do your tax return. Now, an important point to point out here, which is why I put it in to begin with, is that you may have a payer like Bank of America, which is a US bank, paying you interest
Mhm.
right here. That may happen. And more power to you if you were smart enough to put your money in a bank and let it work for you. That's good. US banks might be pretty safe. Might be pretty safe. I won't say anything more because I don't want to give out investment advice. Nevertheless, if you get US bank interest, this is reported, but it is not taxable. It is U.S. source, but under the Internal Revenue Code, it is not taxable. Yes, it has to be reported because it comes from a U.S. bank, but you don't have to pay tax on it. Hopefully, our volunteers at Terp Tax know that, but you might have to remind them of that every once in a while because we don't see too many of these during a tax season. How are we doing with questions right now?
We've had one come up. One of the students has had CPT that was paid, and the employer withheld Social Security and Medicare taxes. The student would like to know, can they receive a rebate for those taxes? And how would they go about asking
Right.
for that?
So again, we have this memo which explains, but I'll give you a quick rundown. What you, while you're in CPT, if it's still your first 5 calendar years, you did not have to have those taxes taken out. So the our audience member is correct. And in order to get it back, the first thing you do is you go to your employer and say, "Oh, we must have had a miscommunication. I'm not subject to the taxes. You didn't have to pay the employer share because the employer shares pays the same amount that is withheld. So all these blue lines here, the employer pays the tax in these lines as well. They're half. It's shared 50-50. So you can go and tell them, hey, you can get your money back. And while you're getting your money back, give me my money back so you'll get that back as well. They can file for all of it, both your share and their share, and then they can give you back your money directly. The problem will be is they may not want to do that. They may say, no, we're not doing that. In which case, you just get a letter from them saying that they're not going to do that. And then with that letter, then you file two little forms with the IRS, send them in, and they'll send you your refund. Those two little forms are in our memo with a little bit more detail. So that you'll want to at least contact Terp Tax
Yeah.
or again, Sue will get and Debbie will get, and you can contact them. I'll give them the memos, and that's how you go about it. You can look on irs.gov also. You can probably do a search there and find out how to get it back.
But the Terp Tax will, volunteers will be prepared to assist a student if they need assistance for that issue.
Correct. You are they may not be able to do the forms because they're not in our system, but they can certainly help you with it.
Okay, thank you.
Glad that question came up. All right, moving along. All right, 1042S. Now, this might be the most important form to point out because number one, it's probably not available yet. They're usually not available till about mid-March. So that means if you are going to get one of these forms, you need to wait. How will you know if you're going to get this form? Generally speaking, it's if you have a scholarship or some kind of grant or fellowship, that's when you are going to get a form like this. So, and it's issued by where the institution is. So in our case, UMD most of the time. And also other types of things that will be showing on there will be treaty exemptions if you're subject to a treaty exemption. So it's not always just these items. There could be other reasons that you'll get a 1042S. But we can generally figure out these without the 1042S if it's not a scholarship. If it is a scholarship, we need to wait for that. If it's something just that has to do with a treaty benefit you get based on you can work here for the first year and you can earn $5,000 tax-free, we'll see that through the W-2. We'll be able to figure that out. So we don't necessarily need the 1042S in that situation, but probably pays to wait if you're going to get it and then do your tax return there. This is the top part of a 1042S. Just to point out, what it will tell you is a code number here for what type of income is being reported by the payor, you, and then it will say whether any taxes were withheld. That's important because if taxes were withheld, we put it on the tax return and you may get it back as a refund. So there's another number there. And it just basically saying who paid it, how much they pay you. Is it exempt from tax? It'll say that. If it's not exempt, it'll say how much the tax rate's going to be. It's all included. It's a pretty simple form. Just give it to Terp Tax or go to any non-resident tax software. There'll be a input box for 1042S and it'll just take everything from the numbered lines here. So it's pretty easy to input. Once in a while, Maryland actually withholds the state, so you'll have that information down here. Oftentimes they don't because they don't know if you're a resident of the state or not. All right, so that's the 1042S. So you may need to wait for this before you can file and finish your tax return. All right. Actually, at this point, now you're just about ready to go get your tax return done because we've gone through the main forms. And so now you go and you file your form. If you turned out to be a resident, you were here more than 5 calendar years, and you've passed the substantial presence test in the number of days that you're here, you'll be a resident alien. You file 1040. If you are still 5 calendar years, you're not counting your days, or you're counting your days, but you didn't reach 183 yet. So then you file the 1040 NR, hence non-resident. Get it? See how clever the Internal Revenue Service can be? Non-resident. All right. On that, you only report U.S. source income. You don't report income from overseas. You don't report gifts from people. This is not where you report any of that. You just report your U.S. source income. You get some deductions. Sometimes if you have a treaty, you get a few more deductions maybe. Depends on your country. And as Sue pointed out to me, there's no longer an easy option, so we'll cross that out. Thanks, Sue. All right. And so that's it. Now the key here, the key thing to point out here is that while it seems easy for me to say, well, if you're non-resident, you file 1040 NR and resident 1040. If you go to we always have about maybe 15, 20 people who do this, maybe more, and maybe more we never even find out about, who are F1 students at our school, and they are doing fine and everything's going well, but they go to TurboTax with the
Mhm.
interest of taking care of their tax compliance. And I applaud them for that. The only problem is if you're in your first 5 calendar years and you need a 1040 NR TurboTax, at least to the best of my knowledge, I know they didn't do it last year. I don't think they're doing it this year. So you will go through TurboTax. They'll take your information. They'll even e-file the return based on your information. You may not even ever notice that it's a 1040 NR, or it's not a 1040 NR, it's a regular 1040. You might not notice that they're filing this. That form is wrong. So you'd have to go back and file an amended return. So like I said, on average, Terp Tax does 15 to 20 or 25 amended returns each year for people who have made that little tiny mistake because they just didn't realize that TurboTax didn't do it. Sprint Tax is related to them. They will do a 1040 NR. So, but you'll pay for it. Come to us, you won't pay for any of it.
Right.
Okay.
And Sam,
Yes.
we offer Glacier tax prep through ITERP, the system our international students use at the university. It's free to the students, and so they can do their federal taxes with that system.
That is true, and it's also a great system when it comes to that one form that everybody has to follow. Remember, we called it the 8843. It does a great job because it actually is very accurate in its determination of whether you're a resident or non-resident. They give you all the information. If you come to Terp Tax, you don't need to follow that 8843 through Glacier. We'll do it for you. If you use Glacier for that and you use it for your federal return, all the more power to you. But if you are a resident for Maryland tax purposes, you have income in Maryland, you're going to have to file a Maryland state return. And
Mhm.
then you can come to us with your already prepared 8843 by Glacier. You can come prepared with us with your
Right.
already federal return done by Glacier, and we'll just do the state for you.
Thanks,
No
Sam.
charge either way. This is what the NR looks like. It looks like a regular tax return. It comes pretty close to it, except a lot of the lines don't apply to you. Why did they put them all down there? Don't ask me. That's the IRS. Okay. All right. So again, you only report U.S. source taxable income or any kind of income, even if it's not taxable. You may have to report the income and show it's not taxable. Let me say that one more time. You have a treaty benefit, let's say. We're going to get to treaties in a little while. And the treaty benefit says, well, you might have this kind of income, but based on the treaty, you don't have to pay tax. Yay for the treaty. Each country's treaty is different, so you can't go by and you can't go by anybody else's tax treaty to tell you what your benefits are going to be. All right, so good. So you don't have to pay tax on the income, but you still have to file the return to show the income and to show that it is not taxable because of the treaty benefits. You still have to file. You can't go on the idea that, oh, there's a treaty, the government knows where I'm coming from. They know what country I am. They know what treaty I follow. The government is smart, but they're not that. It's not that they're not that smart. It's just that the way this system works is we live under what's called a self-assessment system, unlike many other countries. Self-assessment means you're responsible for telling the government what your taxes are, even if they're zero. You have to tell them that. You do that by filing your form. In your case, most likely the 1040 NR. That's where you tell the government what your situation is. You file it, you sign it, file it electronically with Glacier or Terp Tax, and does Glacier do electronic filing?
uh, yes, I believe it does.
Okay, excellent. So makes it pretty simple. Electronic filing is a great idea because then you get a record that it was sent to the IRS. If you mail it, okay, so uh, spoiler alert. If in America, even though you're required to do a tax return to self-assess whether you owe taxes or are getting a refund and just what your tax situation is, even though that's the rule, and so therefore you may have to mail it in because maybe you don't have electronic filing capability where you are or whatever. You file it, you can do it by hand and you can mail it in. So you do that. The spoiler alert is don't do that. Don't mail it in because the IRS is understaffed at the moment, and I'm not saying they will, but there is a chance they're going to lose your return, and then you would have to prove that you mailed it in. And there is a way to do that, but it's a pain in the neck. Electronic filing will give you a permanent record that you filed and take all the mystery out of that.
So,
All right.
Sam, I just want
Yes.
to repeat something that you said to make sure everybody understands.
Okay.
And that was that if you are receiving a tax treaty benefit, that is considered U.S. source income, and therefore you should file a 1040 NR to self-assess that income.
And show on there the treaty benefit, how it applies to you. So you might wind up with no tax, no taxable income on the
Mhm.
1040 NR, but you want to show what the treaty benefit was that got you to that zero. So you do need to file.
Okay, thank you.
Okay, good clarification. Thank you for that. All right, so U.S. source income coming from U.S. banks, stocks on our stock exchange, dividends, scholarships that you get from U.S. sources like the University of Maryland. And if you happen to work and get a wage or you get an independent contractor situation, that gets, and it's from a U.S. employer, then that also counts as U.S. source income. There's different labels for the each different type. That's not something you need to worry about. You just have to know that it's coming from a U.S. source, so it's going to have to be reported, even if, as we just said, it's not subject to taxation at the end of the day. The reason why we emphasize no non-U.S. source income to be reported is residents in the U.S. know that the main principle for a resident, and this will be important when you graduate from non-resident to resident, that residents in the U.S. know that they pay tax on all income, no matter where, all income worldwide. So you as a non-resident only pay tax when it comes from a U.S. source. This we spoke about, but it's just a reiteration just to make sure you don't miss it. Social Security taxes are not taxable by non-residents when they are in their 5 calendar years as F1 or J1 is 2 years. J1 is 2 years, but if you're a student under J1, it's 5 years. So
Mhm.
the student variation is always 5 years, even if you're J1. But J1, if you're here as a researcher, is a 2-year exemption from the Social Security tax. I think we have an illustration to show you how much tax you'll save. I thought we had that. Let me see. Well, apparently not, but it's a nice, I think it's later on. It's a nice amount of money because it's 7.65% of what you get paid. And so you can do the math on like $1,000, it's 76 bucks and 50 cents. So that's pretty good. All right, moving along. Scholarships and fellowships. Yes, they can be taxable and they could be non-taxable. These rules apply to residents and non-residents as well. If the scholarship is from a U.S. source, it applies to you. If it's from your home country, this does not apply to you. One more time, if the scholarship comes from the University of Maryland, this applies to you. If it comes from the Nairobi or something, Australia or something like that, it will not apply to you because they will not be taxed here. It's not a U.S. source. All right, if it's from the U.S. source, what's taxable, what's non-taxable? Non-taxable is all the fees that you're required to pay to get your education. As you can see, required, required, required. Each bullet point required. Your scholarship or fellowship or grant may include on the right-hand side, room and board stipend, meaning living expenses, an allowance for travel, allowance for incidental expenses. Oftentimes, the scholarship you get comes with amounts above and beyond the required fees to help you find a place to live and to get comfortable here in the United States. That's great, but that amount is taxable. That amount is taxable. How will you know if you have that? That's a great question. I wish I had the answer. Ah, I have the answer. Here's how you'll know. And then what you'll do with based on what you'll find here, then you may have some questions to the school about it just to confirm it. But this is the guidepost that you'll use. It's called a 1099. It's called a 1098T. There you go, 1098T. The T is for tuition. Another. See how genius they are at the IRS with these forms. All right. So what they'll do is they'll put in box one, they'll put in all the amount you paid for, and look at the little tiny language. I'm in my old eyes. Look at that. Qualified. Qualified tuition and qualified related expenses is what they mean here, because the word qualified goes for both qualified tuition and qualified related expenses. So in box one will be all the things that you had to pay using your scholarship or even not using your scholarship, all the things you paid to the school that were required. So that gives you all those items on this left-hand side here that we see here. Gives you all that. Then they'll tell you in box 5, if you had any scholarship, they'll tell you how much it is in box 5. You simply then do the math. You say, okay, is this greater than those required payments? If so, then you may have, and most likely will have, the taxable amount because you received money greater than the required expenditures. So that's how you would know. If box 5 is less than box 1, you don't have to worry about anything. So that's your red flag as to whether you've got scholarship income that needs to be reported. Now, before you jump to conclusion that, oh, I'm going to have to pay tax on that, that may be true, but your treaty benefit may come along and solve that issue. We're coming to treaties, but I'll do another spoiler alert here now. Our Chinese students coming here from obviously China, their treaty benefit is wonderful because even the scholarships that might fall in here that are taxable because they're greater than box 1 are not taxable in the U.S. All of their scholarships are not subject to U.S. tax. So that's good for their treaty. They don't have the best treaty, so don't start feeling sorry for yourself if you don't come from China. They don't have the best treaty. It's good, but we're coming to the best treaty in a minute. Okay. Other income we spoke about, interest, dividends, capital gains. I'm going to try to make you guys and ladies experts in this area of international taxation as F1 students by just pointing out one thing here. This is a really deep down look at the Internal Revenue Code, very esoteric, very not well known amongst people even filing these returns on a regular basis. And that is if you sell U.S. stocks at a gain, let's say you bought Apple at the beginning of the time you came here, and a year later you're still here and you sold Apple for a gain. You made some money with the stock. It went up. Good for you. Normally, a non-resident doesn't pay capital gains on stocks in the United States marketplace. Normally, you are a non-resident, you don't pay gain on that, no tax. However, when you're an F1, this is the bad news, but it's really good to know just in case. F1 students, if they're living here 183 days in that calendar year, if they're here 183 days in that calendar year, they do have to report the capital gain and pay any tax that might be due on it. One more thing to say about this is that this is an exception to the general rule. It's not well known. If you miss it, depending on the dollar amount, you might want to consider doing an amended return. Even if you do have taxable income from the gain, look at it in two ways. First of all, look at it from the standpoint of, hey, I made money. Sometimes paying taxes is a good thing because it means you made money. That's a lesson in life in general that we can take from the tax and apply it to a lot of things in our life. So just having to pay something doesn't mean it's a bad thing. And the other thing is to know that our capital gains tax rates are what we call preferred rates. They're usually lower rates. So the amount of tax you might pay could be zero, or it could be 10%, a very small amount. So I wouldn't worry about it. Just do the right thing and report as properly as you can. You will know if you got this because you'll get one of those 1099 forms. This one would be called 1099B, coming from a broker. That's why it's a 1099B. All right, now you're experts. Okay, let's go to the next step. Yes.
Before we go into the tax treaties, I think we need a little bit of review from the
Okay.
questions I'm seeing in the Q&A.
Okay.
First is there a preferred way of filing taxes, electronically or in the U.S. mail?
Electronically, hands down.
Okay. And the person who will file electronically will need to have a U.S. bank account.
If they owe money or are getting a refund, that would be best is to have a U.S. bank account, right?
Okay. And then last year, we have the question. Last year, someone did not, well, I think in 2024, the person.
Did I lose?
Yeah, I'm back.
Okay.
Okay. The person didn't have U.S. income in 2024, so they just filed the 8843. However, they've had income since August of 2025. they will receive a W-2 and will need to file the 1040.
1040 NR if their first 5 calendar years.
Okay, 1040 NR. Very good. And if they have assistantship, scholarship, or fellowship, or a tax treaty, they're going to get that 1042S, and they need to receive that as well.
Correct. So
Okay.
in that case, they will have to wait to receiving that.
Right. That's best to wait. Um, how are loans viewed by tax in the tax environment? Does a loan count as income?
No, if you borrow money, it's not income. The only time a loan becomes income is if you're told you don't have to pay it back, and then it becomes income in the year that happens. I don't think for most of you that's going to happen. No offense. We're not all that lucky. So when you borrow money, that is not considered income.
Okay. And we have a question about how does a person receive the 1098T?
Usually through the mail. Usually through the mail, or I don't know if does Maryland send out things through the emails? Perhaps they do, or they have a portal. I think Maryland has a portal where you can find your tax documents.
Yes, they have the controller's website. I'll go look that up and post it.
Excellent.
Okay. And then there was two questions on the 1098T. There's a person who is asking for a clarification when we're talking about non-resident. And here I think we should be specific about non-resident for estate and non-resident for federal taxes. Because
Okay.
the question is, I'm a non-resident since I've been here for less than 5 calendar years.
Okay.
That's the question. So how does, I think we have to help people understand federal and tax
Right. So
resident.
that those slides are at the end of the deck, but I'll just say it now since the question is here. It's always good to answer when it's in front of us. Maryland state does not follow the federal rules for F1 visa students. There are some states that do, Maryland does not. So if you're here 183 days in the calendar year, regardless of whether it's your first year, 5 years, 10 years, doesn't matter, you will be a resident for Maryland state tax purposes, and you'll file as a resident. We are coming to any specific nuance with that, but the specific answer is you would be a resident for state of Maryland.
Some people live in other states beyond Virginia. How do they determine what state tax they need to file?
Well, the W-2s will tell them if they've earned income in any of those states, and that's generally the only type of income that would be taxable outside of Maryland. So if you're
Mhm.
living in Maryland, but you've earned income, W-2 income for working, then you'll get a W-2, and it'll say on the W-2 the state that it's coming from, Virginia, Washington, California.
Mhm.
It'll tell you on there, and that you'll bring to Terp Tax as well, and we'll help you file a multi-state return. So you'll have a federal return, NR, and then you may have one, two, three, four states that you have to file as well, depending on where you were working in that year.
Thank you, Sam.
Okay. All right. Drum roll, we're going to go to the treaties. All right, tax treaties and their impact. So tax treaties can reduce or eliminate taxes on certain types of income that you get from the United States as U.S. source because you're not a resident of the U.S. So the first thing to know is you can use a tax treaty as long as you're non-resident. Once you become a resident of the United States, throw the treaty away. It doesn't apply to you. That's the first lesson. One more time. The treaty will apply to you in your first 5 calendar years here because you're a non-resident. After 5 calendar years, if you pass the substantial presence test and become a resident for tax purposes, well, don't throw the treaty away. Just ignore it. It doesn't apply to you. Now, let's take a look at claiming treaty benefits. Very simple to do in your situation. There are not that many treaty benefits that you're probably going to apply to you. There could be more, but most likely we hardly ever see those. Yours are pretty simple. And in your case, although there is a In your case, the simplest thing you need to do is if you're working for somebody other than the University of Maryland, because they know, the University of Maryland knows, but if you're going to work for somebody outside of the University of Maryland system, you're going to, and maybe even the University of Maryland system has you file this, and I've never seen anybody doing it, but it gets filed. It's a Form 8233. That tells, do I have a copy of that form here? Let's see. I th- Oh, I think I might have had a copy of it up here. And I might have deleted it. So we're not going to go there. But the Form 8233 tells any prospective employer, hey, this is me. I come from Australia. We have a tax treaty. Look at that treaty to see on what you're paying me if there's any treaty benefit. So the employer will do that. They will figure it out. As it says here underneath all this, it says the 8233, you give it to your employer, and they will figure out what treaty benefit you're eligible for. You can give them, you might want to give them the copy of the treaty, but there's usually not too much else you have to give them. One more thing on this slide is Form 8833 is to get on your 1040 NR the benefits of the treaty. Almost, I've never seen, except maybe in one exceptional case, I've never seen anybody here at the Maryland F1 students at University of Maryland ever need the form because it has exceptions for scholarships. It's got exceptions for this country, that country. So most of the time, you're not even going to follow that. But if in doubt, come to Terp Tax and we'll let you know. Here, let's take a look at some treaties to see what kind of benefits you get. I picked this one deliberately as number one because uh, unfortunately, or fortunately, depending on where you're from, this is the best treaty that you can have. This is absolutely the best treaty, and you can see where it comes from. So if you're from India, and by the way, to make you really experts, in order for you to use this treaty, you have to be coming to the United States from India. Your last place of residence has to be India. So if you were an Indian resident, you're there, you're a registered voter or whatever they have there, and you go to England to study for a couple years, you may not be able to use this treaty. You might have to use the treaty from the UK. That's just plant that in the back of your mind someplace. But if you come directly from India here, then you're going to get to use this treaty. And I'll just point out this is the article that applies to you, and I'll just show you what is the great part of it. Let's see, where is it? Okay. Um, okay. Hold on a second. I got to remember where the language is. It's a little subtle. Oh, okay. So if you're here for primarily um, for employment related to your status as a student, scholarships related to your status of a student, grants related to that, if that's what you're getting, and any work that you do is covered by your F1 visa, you're doing all required work as F1 visa, that's why you're here, then you're entitled to, as it says here, entitled to the same exemptions, reliefs, or reductions as residents of the U.S. There's no other treaty that does that. And what that allows you to take as a deduction is what we call the standard deduction. And standard deduction went up recently, went up real significantly to the joy and delight of U.S. residents and to India F1 students who now can take the standard deduction. If you're single, it's 17,750. That means you can earn up to that amount of money before you have to pay any tax. It's all tax free because that comes off before you have to pay any tax. Only things above that amount might be taxable in the U.S. That's the U.S. India treaty. Here's China, which says that grants or awards from government, scientific, educational, or other tax exempt organizations is not taxable in the US. And that's if you're here for the education training or special technical experience, which all these grants, all these scholarships are being given to you for exactly that. So it would be a really rare situation that you would have a scholarship that you're going to have to pay tax on in the US. You also get $5,000 in salaries, personal services salaries. The first 5,000 is not taxable in any given year while you're a student. so you can earn some money as a TARA, and that also may not be taxable. So this is a pretty good treaty. I think India takes the win, but this is second in line. And I'm just the messenger here. I didn't write the treaties. Every country is different. Some countries we don't have treaties with for the obvious reason. Stay out of politics here. Okay. This we don't have to cover. It's not necessary. We already talked about Social Security, Medicare taxes, not applicable to F1. Don't let somebody tell you you have to pay those taxes or take it out of your paycheck while you're in your first 5 calendar years here as an F1 student. Unless there is an exemption, there is an exception to this, unless you're doing some kind of work that is not allowed by your visa. I don't think any of you are going to do that. But if you did, then Social Security taxes can, in theory, be applied to you. Okay, let's see. Here's the savings example. What do we do here? Where's the numbers? Where's the numbers? On $15,000 of wages, you will save $1,147 of Social Security Medicare tax because it doesn't apply to you as an F1 student in those first 5 calendar years. And it applies while on campus, CPT, OPT, and any other authorized F1 employment. So you want to check with uh, your advisor with the ISSS office, etc., to just make sure your employment qualifies, and then you don't have to pay those taxes. That's nice savings. Okay. The exemption for the Social Security ends when you become a resident alien, typically after the first 5 years, and then you pass that substantial presence test. So it could extend a little bit beyond the first 5 years until you pass that test, but you have to be very conscious of when you reach that point, and then you're subject to those taxes. And so it ends when you become a resident or that unauthorized employment. Here's a slide about how do you get it back. First of all, you request the refund from the employer. If they say no, get a letter from the employer that says they will not refund it to you. Then you file with that letter the Form 843 with the IRS. Keep all your documentation. Again, I'm going to disseminate the written memo on it so anybody needing it can get it. Terp Tax will always have it. So that's if your taxes were taken out for Social Security incorrectly, you can get it back. What you should probably do is take word to the wise. When you start employment anywhere outside the University of Maryland, since they know better, that tell your employer, oh, by the way, do you know who I am? And they'll say, yeah, we hired you. We know who you are. I mean, you tell them that you're a non-resident alien for tax purposes, and they can look up that they don't have to do the Social Security tax. If their CPA or accountant doesn't know it, doesn't understand it, and thinks you're wrong, I'm happy to explain it to them. Very happy to explain it to them. I've done it before.
And Sam, I'll just add, if you're apprehensive about speaking with your employer about this aspect of your taxes, remember, it's to their benefit. They are
Mm.
going to benefit by not having to pay those payroll taxes from their company. It's a good
That's
thing.
right. You're not hurting them when you tell them there's something should be they have this option to make the correction. They don't have to, but it's to their benefit to make it. The more money you made with them, the more benefit it is to them. Excellent. Good, Sue. All right, this was supposed to be the document. It may actually work when I send out the slides, but we'll get it to you somehow. All right, so to recap a little bit here, the process for F1 students is to make sure you're in compliance is every year you're going to do that 8843. Don't forget that. As was said by Debbie, I think at the beginning, we're some 50 some days away from the filing deadline, April 15th. Extensions are easy to get. Terp Tax will be doing them as we get closer to April 15th, so you can get your extension there. We file on a calendar year basis, but it's due April 15th and always do the electronic filing. Gather your documents. You'll need the W-2, all the documents we talked about here. Then you got your passport, your F1 visa. things of that nature you're going to give to whoever is going to prepare your return. If you have those numbers, you would give that to us. If you don't have it, we can help you get an ITIN number if you're going to need it. So that keep that in mind. Financial records, any W-2s and information showing your scholarships. That's what you're going to gather, and those are the required documents that you're going to need. Our website does a pretty good job of prompting you for all these documents and more, whatever they might be. Then and your glacier will have determined your residency. So you'll know that by the time you walk in, you'll know it yourself, whether you are resident or non-resident based on these rules that we've already covered. So we can skip through this. We've pretty much knocked that to death. Every year, I'm going to say this 20 times probably, because there's no penalty. Here's the issue. I think we all know this. The issue is you're supposed to file this every year. If you don't file it every year and somehow somebody's looking at you with a fine-tooth comb and they say, well, maybe you filed the wrong tax returns. Maybe you were supposed to pay tax here as a resident. So with this form filed, each of those 5 calendar years, you'll have the proof that you need that, hey, I was a non-resident. Here's why. This is the form that said I'm a non-resident. So make sure you do. All right, then you do go to the right software. Don't use TurboTax. You got Sprint Tax, Glacier, all good stuff, or Terp Tax. Report all your U.S. source income, claim the treaty benefits, calculate your tax liability. This will all be done by the software, but we're just pointing out what's happening so you'll know. And then keep copies and proof of filing. The electronic filing is the best way to keep that copy. And don't lose any of the documents. Have it in some kind of PDF format so you always have access to it. Those are my words of wisdom. All right, now my words of wisdom is let's talk about the states a little bit more. We mentioned it. Let's go a little bit more detail. You probably will have a Maryland state tax obligation because Maryland is one of the few states, but they're not the only one. They don't follow the treaty. No treaty benefits. So when you do Maryland's tax return, even if you do it through Terp Tax, you're going to see certain things added to your taxable income because they weren't included in your federal. It's going to be added to your income. And that's because Maryland doesn't follow the treaty. So when you have scholarship and you're from China, it's not subject to tax under the treaty that the United States government has with China. But guess what? Maryland doesn't follow the treaty. So you're going to see on your Maryland return, we're going to add back what was not included in your federal return. We're just the messenger. Don't blame us. Don't scream at us. We're just doing what we have to do because that's Maryland. If you want to know what states follow the treaty, I'm not sure I have that in the top of my head, but Virginia might not. Virginia might follow the treaty, so you might consider. No, I'm not giving you advice to move. I'm not allowed to do that. Okay. All right. But this is the issue with state of Maryland. And it's a resident if you're here 183 days for the year or more. So it's the same idea, but that test is just each calendar year. There are no free calendar years under F1. Maryland doesn't follow the treaty. Do you need? Yes. In most states, you're going to need to file. Even if it follows a treaty, you're probably want to tell them what's going on with you because they're going to see a federal return filed in your name and they're going to try to match that up. So you're going to want to be able to have the state easily match what's being filed for that state with the federal return. There are 9 states that have no income tax. Let's see what they are: Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. Some of those are attractive to me to go and move to. So maybe for you, they don't have an income tax. Welcome to Maryland. All right. You might wind up having multiple states. Your W-2s will most likely be the source of telling us whether you need to file in more than one state because you'll get a W. We already had some this season already. W-2s coming in from somebody who worked in Tennessee and Maryland, somebody who worked in California and Maryland, etc. So we can file all the states where there might be an income tax, we can file those returns. You won't pay tax twice. You just have to divvy it up between the 2 states. Okay. It has the same filing deadline as the federal. Some states differ. I haven't come across those yet. And residency rules. States to watch out for. I'm not saying not to move there or not to work there, but states that have some strange rules, sometimes good and sometimes bad. California, New York, Massachusetts, they're a little bit different. New York's definitely different. All right, and some states do recognize treaties. It doesn't look like I put that down on here, so we are just about done. Okay, it's the same process. You do the federal first. Always do the federal first because the states follow the federal. Even Maryland follows the federal. They just don't follow the treaty benefits, but they follow the federal for everything but the treaty. So where do states start? They start with your federal income tax return. So that's number one. That's the good thing about Glacier. They're going to have already done that. So now you need your state return. You'll have to bring Glacier's return with you if that's what we're doing. You followed Glacier, you bring it to Terp Tax for the Maryland return. We'll follow what Glacier did. And this is the U.S. tax formula. Uh, you might be interested in a little bit of it, so we'll just quickly go through it. First, you report all your gross income, all your income. That's U.S. source. That's for you, U.S. source. If it's me, I'm showing all my income from wherever in the world it is. Then, if any exclusions apply to you, you subtract those to get what's called adjusted gross income. I got lots of possible subtractions. Most of you don't have hardly any of those that would apply. So don't expect anything that's going to come off. You probably don't have much in the way of deductions either. There is the India deduction, it gets the standard deduction, and then most of you will also be able to get a limited itemized deduction for state income taxes that you pay during the year or charity. It's not a terrific deduction necessarily in terms of go give a lot of charity to save taxes. But if you did give to charity during the year, you would have gotten a letter saying thank you for your gift. Bring that to Terp Tax. We'll put it in there for you and let it do its magic. If it's state income tax that you paid, it would have been through a W-2. So there's not anything necessarily special you have to do. We'll see it on the W-2 form. And then you get the taxable income times by taking the taxable income by subtracting 1 - 2 to get to 3. 3 - 4 gets you to 5. That's the taxable income. Apply the tax rate. We live in a graduated system, and the rates go up as the more money you make. And then if there's any credits or withholding tax, we subtract that to find out whether you are going to get a refund if you overpaid through the withholding tax, or if you didn't pay enough, whether you have to pay. So refund or pay is not necessarily a bad thing. It's just doing the math. What was your tax? What was your income? What's the rate? What's the tax? What does that all add up to? Did you pay anything in? Did you pay too much? Did you not pay enough? That's how you get to the refund or the payment. Okay, common deductions and credits for F1 students. I'm just going to go like this. It's not much. You don't get education related deductions, maybe in certain situations, but you don't get an education credit like residents do. So don't count on any of that. Just almost tell yourself that unless there's a treaty benefit, you're just going to pay tax on your pretty much your gross income. Okay. Mistakes, common mistakes, following the wrong form. So resident form is a common mistake. Don't make that mistake. I think we're done. Outside the United States, well, that's your home country. Okay. Don't use the wrong form. Don't forget 8843. Okay, this is actually a good slide. This is a good slide to almost conclude with, and then we'll take questions. And that is, don't use the wrong form. If you're a non-resident, use the non-resident. Don't forget this one. How many times we said it? Don't forget it. Make sure you are claiming the right treaty benefits. If you have any doubt, come to Terp Tax. We are experts in helping you read through and interpret what it means. And never fail to report any U.S. source income you have. The one thing the IRS does not like, our government does not like, is if you don't report all your income, even if it wasn't going to be taxable, even if you don't owe any taxes after reporting it, report everything. That's the United States ethical viewpoint. They want to make sure you report everything you have. So any U.S. source, put it on the form, even if it's subject to a benefit of some kind and you don't pay tax. And that, I think, sums it up. Stay compliant, protect your future,
Mm-hmm.
talk to us. Oh, so hopefully, let's see if I have it here. That's not it. Not it. Okay. I don't know where I put it. I had a sign up of the Terp Tax sign, but I think I deleted it. Okay. Wherever it is, you get Terp Tax. You know what? Here's how you find this. Look at ISS website,
Yep.
Debbie as well. I think it's Terp Tax
I'm going to
UMD.
post it,
You
Sam.
post okay.
Okay.
I don't know. How do you like that? I don't even know what it is.
It's, let me tell you,
That's terrible. That's
it
terrible.
is just simply all one word, terptaxumd.org.
Oh, I had it right. Okay, Terp Tax, all lowercase,
All
uh,
lowercase.
terptaxumd.org
Yes.
at at org. Terptaxumd at
No, no, just dot.
oh right .org right
Yeah.
Yeah.
terptaxumd.org.
And
That's right.
and the link is in the chat now,
Oh, thank you.
of course.
Couple of Q&As that came up
Okay.
after you catch your breath.
All right. Fire away.
Um, I think one of the important things we should discuss is I'm going to call it a two-tier system. I don't know if this is the correct language, Sam, but
Okay.
we all have a federal tax requirement, and we may, depending on the state where we earned income, have a state tax requirement. And these are two separate requirements. So when we discussed Maryland doesn't follow the treaties, it the question is, does that mean we don't get any exemptions
That's well, you may still get some exemptions. You just don't get the treaty exemptions
on your state taxes?
on the state tax return. Right. The
But you
state,
do get them,
right, because you're a resident, so you will be able to get all exemptions that apply to a resident. You just don't get the treaty benefits.
right? And that's on state taxes.
Correct.
A person will receive benefits at the federal tax level.
They will
Yes.
receive benefits at the federal tax level, the treaty
For
benefit.
their treaty?
Correct.
Yeah, I think that's a question that's out there. Like I can get my federal tax treaty benefits, but I may not qualify at a state level.
Correct. But you will qualify for state resident exemptions or if there are any. Yes.
Okay. And then let me see some of our pre-tax workshop questions.
Yeah, I'm looking at them now too. So,
Uh-huh.
yeah.
Um, the okay, when a person is on the Fulbright scholarship
Right.
and they have received the UMD fellowship.
So you'll take both of those forms to, let's say you go to Terp Tax, you'll look at both those forms and you'll see whether or not any of the amounts are above your required expenditures as we went through on the Form
Mhm.
1098T, and those you may have to report absent some other treaty benefit that says you don't have to report it. But the Fulbright and the Maryland Fellowship Program, Scholarship Program at UMD, all follows under that rule. If you receive some living expenses, you first of all you should understand that your scholarship is applicable to living expenses, not just required
Mhm.
fees and tuition. You should have already understood that from your scholarship award to begin with. That amount would be reportable and may be subject to tax.
Okay. I liked this one. I opened a bank account at the Chase Bank and received a $125 promotional offer. Now I have a tax form and which shows that amount in the interest section.
Right, right.
Do I file? I have no other income and I don't have a social security number.
Yeah, so you're going to have to file, but you won't be paying tax on it. So the nuisance is because you have some income, you don't want to not file uh, because you do want to show that you reported it, and then you'll show that it's subject to the fact that it's not taxable in the U.S. since you're a non-resident, and under the non-resident, U.S. bank interest is not subject to tax, but it is U.S. source, so you do need to file the forms.
Mhm.
You can get an ITIN. You don't have to go through the process of getting the Social Security number unless you're soon working and you're soon applying anyway. But most likely, the ITIN is going to be the route you go.
Right. Um, I'd like to talk a little bit with our group about retention of records. So a person files their taxes, and how do they retain records for their personal records, and how many years should they consider retaining those records for taxes?
Okay, I'm going to answer the first question in order of how you retain it. You to do it the way you know where you won't lose it. If electronically is the way you won't lose it, which is my way, then do that. If
Mhm,
you fumble around with your files in your computer, then paper file all those, print them all out and put them in a file cabinet if that's the way it works for you. The
mhm.
number of years you want to hold on to records is 3 years from the date you file. 3 years from the date you file. So if you file on April 15th, hold on to those records 3 years from that date.
Mhm. Thank you. And we did receive a question where if someone had actually used TurboTax to file. So I'd like to re-emphasize the advice you gave about visiting Terp Tax.
Yes, you go with the Terp Tax, you make an appointment, you'll tell them that you filed the wrong form. They'll file an amended return. It's not so difficult for them to do, but they'll do it and they'll show you whether or not your tax liabilities change. Maybe you're getting money back. You might owe. It depends. All depends on what TurboTax did for you based on your situation. There's no automatic formula for that, but you do need to file an amended return, which will include showing what the non-resident return should have looked like.
Okay, I'd like to just open up our Q&A to the group. So if anybody has any unanswered questions that they'd like to put in the Q&A, we'll take those now.
I'm just looking at some of the ones that came in before the webinar when they were signing up. There was a J1 intern that hasn't filed a return in the past, so they need to do, it says unpaid J1
Oh,
intern.
yeah. Mhm.
They certainly have to do that 8843,
Yes.
and they should maybe they should just make an appointment at Terp Tax just to find out whether or not they should still file it for the last year's return, thinking it might be 25 they're talking about. Uh,
Mhm.
it's probably not a bad idea just to check in because you may still be getting a 1042S. So wait it out and see if you get any sort of income whatsoever you want to report. Out of state student at the University of Maryland, yes. So you're going to need to file wherever you are, but you're working at the University of Maryland, so it's going to depend on the W-2 how they
Mhm.
report. If you're working like you're Virginia, you live in Virginia, if you live in Pennsylvania or DC, there's reciprocity. You'll know by the W-2. Show me the W-2 and I'll tell you what you need to do.
Mhm.
Graduate assistant, file return. Yeah, oh, so they're not finding their W-2, so they may have to just go to, where did
The
we say?
com the comptroller's website, which got posted in the Q&A,
Okay,
I can go ahead and copy it and put it in the chat here.
And
excellent.
I will share it in the post-workshop email that everyone will get tomorrow.
Very good. Will the F1 student visa people get any return from federal income apart from state tax? Can't answer that question because it all depends on what's been paid in, what your income level is. Every situation's different.
Mhm.
Will say nobody's going to listen to me, but I'll say it anyway. Don't compare what your refund or payment is told to you with anybody else. Even if you think they're exactly like you in terms of their income and all that kind of stuff, it doesn't matter. The only way to know for sure if there's a mistake on your return is compared line by line to your friend, and they may not want to do that, so you just
Mhm.
can't make comparisons like that. There could be differences that you don't know about. Last year we had every year we get about a half a dozen to a dozen people say, my friend is the same as me, and and about half of those actually bring the return in. The friend comes in, I look at it and I say, well, your friend had this. You didn't have this. I'm always able to answer those questions. Have no
Mhm.
fear. That's not the kind of mistake we're going to be making. We don't make, every once in a while we make a mistake. We'll fix it. But generally, our returns are quality reviewed. We have two levels of quality review. You're in good hands.
Mhm. And let's just talk for a moment. Let's say someone has completed their taxes independently, and they, after filing, find that they did make a mistake. What are their options with Terp Tax?
We file amended returns for anybody who has that situation. It's not a problem.
Mhm.
And that's all for free still. But an amended return is your obligation. Well, it's debatable whether it's an obligation, but you want to do it. F1 students
Mhm.
definitely want to do it. Residents like myself, I want to do it also, even though the strict law may say I'm not required to do so. If I don't do so, I could get other problems. So everybody, just about everybody files an amended return to correct mistakes.
Sam, we have another question. Does
Sure.
credit card cashback bonus programs count as income?
Credit card, you mean if you get money back, cash back?
So if you spend a certain amount of money with your
Yeah.
credit card, they may give you a cash back.
Yeah, yeah. The
So
um wow.
yeah,
I don't get that. My credit card's not that good. Okay. Uh geez, I think you would get a 1099 for that. And what I would do yeah, what I would do no, I know the answer. I know the answer. This goes back 20 years or more.
Mhm.
I know the answer. The answer is it's not income.
Mhm.
It's considered a reduction of the price. It's like getting a discount.
Mhm.
So you don't have to report that. There should be no form from the credit card company to you. It's not taxable income. You just got like a bargain purchase. That's all.
terrific. Sam, you need to find a different credit card.
Yeah.
You're right. You're right.
All right. Any other questions? All right. I'm sure they're brewing and you'll think of it 2 minutes after you sign off, but you have resources. And I will share all of those in the post-workshop email tomorrow. But wow, Sam and Sue, you two make a great team. And thank you so much for sharing 90 minutes with us. Um, Sam, your presentation is always so informative, and I appreciate your attempts to make us experts. Don't know if it worked, but it's appreciated. And Sue, thank you so much for handling all the questions. You're so knowledgeable about all the hurdles that international students have to jump through to be successful. And you guys were terrific. You answered over 30 questions. I was keeping
Well,
track.
thanks, Debbie. And,
So,
and Sam, I just want to say thank you, and thank you for being the faculty advisor for Terp Tax. The good work that is done through Terp Tax just uh, can't be valued enough by this university and this community.
yeah.
Well, thank you enough. And I have to say that both of you give me the strength every year to continue doing it because you're dedicated to this, our international students, our visitors, and I am as well. I've come to appreciate their presence here in the school, and I hope it continues for hundreds of years.
Thing. And I
Well
just
said.
want to say one last thing. The right now the ISSS tax page, US taxes, is being updated. So we will be having that update completed by February 20th, which will be the day that Glacier Tax Prep or Glacier Tax will become available in the iTerp system for all of you who want to evaluate your tax residency with Glacier.
Sue, will the location of the page remain the same or will it
Yes.
be an entirely new page?
No, the location will remain the same.
Perfect. Okay.
Okay,
All
thanks
right.
everybody who attended, and here we go. Tax season is upon us.
Here we go. So please complete that post-workshop email. We want to hear your feedback. And I know this is a lot, but you've got this and you've got help. So Have a good week, everyone. And as always, let us know how we can help you. Thank you.
All the best. Bye bye. Thank you.
Bye.